FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video as we continue our Trading with a Purpose series. We're back at it again on a new week. We're looking at pound USD. Obviously we're coming off a peak formation low, so we're still looking for buys. Now the question is, how long are we looking for buys? Well, if we take a look here, what is the average ADR? We're looking around, we're about pretty much at 100 ADR on this particular pair, and if we measure it out right now, we're over 500. So essentially this right here is a super cycle. I think a lot of it, what you're seeing right now with this and all the other USD pairs obviously has to do with tariffs, is one of the main big topics. So for right now, we are looking for buys. Obviously, we do have enough for a peak formation high, obviously, so we could start to see a peak formation high to form. That would be ideal. We don't have any evidence of that peak formation high forming as of yet. I think for us to get a peak formation high, we would need to be trading essentially below 132,000. That would be the first thing that would need to happen. Is price action would need to come down and actually start trading below 132,000. Until that happens, we are still looking for buys. We've been on this uptrend for essentially about a full week, week and a half almost, is another thing. So how many setups in this week and a half long trend are there that we could have potentially gotten into? So let's take a look at those real quick. So looking at Thursday, we have essentially a type 3 pattern in London. So that would have been one trade there in London. The setup itself would look like this essentially. You have essentially a star pattern here in London session. Entries after that, if you would have gotten a pullback, that would have been a better entry. But essentially you're looking at this trade right here. This is a almost a 3.5 to 1 risk reward ratio on it. As far as trades in the New York session, the only one that I think could have had, people get into or traders get into would have potentially been a reversal back to the 50 essentially, right? Traders could have seen this as a reversal, as a first leg here, second leg here with the railroad track, and then you're basically trying to do this. Now obviously it did not make it to the 50 EMA. It was very close, I think right at 2 to 1 risk reward ratio, depending on obviously your entry. But that could have turned into potentially a loss, or if you would have just taken it a 2 to 1 trade, it could have been a win. So honestly, it just depends on who you are as a trader. Looking at the very next day on a Friday, we have this right here. Now on a 15-minute chart, it does not look like, honestly, it doesn't look anything. You'd have to go down to, like, let's say a 5-minute chart, and on a 5-minute chart you can clearly see that there is a W pattern there for a type 2. So this would be essentially the first leg, and then second leg is right here. Now you don't get a second leg pattern, so essentially you're looking at using essentially a close of the 13 EMA to get into this potential trade. Again, you'd have to be trading this on a 5-minute time frame, or you wouldn't really see it, or you would think nothing of it. If you were to take that trade on a 5-minute time frame, 7 to 1 risk to reward ratio on here on a type 2 trade. Now if we go back to the 15-minute time frame here on that same day, you could see that coming back from the US session, there is a potential trade here for a reversal, again going back to the 50 EMA. Now the question is, going back to the 50 EMA, could you have gotten enough to say a 2 to 1 risk to reward ratio? Well, the thing about this particular trade is you're not taking the trade until after this candle here, because that's the candle that closes below the 13 EMA, because you don't have a second leg pattern here to trade. So you do get a pullback, which is great. So depending on where you get into that pullback would determine it, but you can see here that to the 50 EMA, you're not getting really a 2 to 1 trade. So for me, that would not have been a possible trade for me to take. So would not have taken that particular trade. Coming into Monday, there is nothing for me to trade here on Monday. Okay, as I'm still again looking for buys. There's no buy setups here on Monday on London session. There is a trade set up during the New York session, which is essentially a continuation trade. Now, this continuation trade, obviously, you get a sharp move back down to the 50 EMA, and then you get essentially a star pattern here. That star pattern essentially is your entry right after it. So the setup itself would be something like this: 2-to-1 risk to reward ratio, and essentially that is the actual trade there. Now you can see it's not until essentially like London session that it actually hits, you know, your take profit or whatnot. So coming into Tuesday though, you had another trade, which is essentially a type 3 trade. Now this type 3 trade, you do get a star pattern here at the beginning of the London session and a massive pullback. That pullback candle, that red candle, is essentially your entry. So from there, you're essentially just going again 2-to-1, and in anything over that 2-to-1 is essentially risk free. So in this case, you're looking safely at 3-to-1 risk to reward ratio on that particular trade. Now there was also another opportunity potentially that you could have seen also in the New York session. And same thing, it's a continuation trade with a big railroad track here. So that setup itself would have looked something like this. And you're looking again for a 2-to-1 risk to reward ratio. So that trade would be, you know, something like that. Now, obviously this one you would have had to, again, hold it until the next day. So that's, you know, up to you if that's within your traded plan itself. But so far, you're looking at 1, 2, 3, 4, 5 trades with potentially one loss here if you held it, and then this would not have been traded. So 5 trades, 5 wins, 1 loss is what essentially you should have came up with. Again, depending on whether or not you hold this could have also been another loss. So you're looking at 4 wins, 2 losses. But again, the wins here, you're looking at 3-to-1 risk to reward ratio. A 2-to-1. This one here being a 5 or 6-to-1 risk to reward ratio. This one's a 3-to-1 risk to reward ratio. So all of those losses are completely essentially negated by the fact that you had 4 wins that were well over 2-to-1 risk to reward ratio on most of the trades. All right, so that is a recap on pound USD. As you can see, we're essentially still looking for buys again on pound USD until we get any kind of change when it comes to getting a peak formation high. You have to be careful, obviously, because we already know we're super overextended on this, but I think for me, as long as it's trading above 132,000, I'm still looking for buys. I'm just being very cautious and very picky about any particular trades that we're looking into. Now to finish off here, looking at it on a daily perspective, as far as where could price go next, essentially we're looking to at least go 133,500 would be the next target for me. 133,500. Obviously we have 133,000 first, and then 133,500. So those would be essentially the next 2 targets for me. Again, as long as we're trading above 132,000, I'm still looking for buys. All right, guys, quick video here on pound USD. And again, we'll take a look at the other pairs, pound JPY, NAS 100, and gold here during this week. If you found this content helpful, guys, do me a favor, leave a like, share the content, subscribe to the channel. Let me know, did you take any of these trades that we talked about today on pound USD last week? Let me know in the comments, and we'll see you in the next one.